Um, who can I pick on for the Pledge of Allegiance? How about James? Can you lead us to the Pledge of Allegiance today?
I would be happy to, Madam Chair.
Diane?
All right, I'm going to steal from Miss Harris. Ready? Begin. I pledge
allegiance to the flag of the United States of America, and to the republic for which it stands,
one nation,
God,
indivisible,
with liberty and justice for all.
Okay. So public comment is available on the board to be viewed at mendocinocounty.org retirement. Don't have any live public comment. So moving on, I would like to read the proclamation honoring Executive Director James Wilbanks, PhD. So, proclamation of the board, Mendocino Board of Retirement, honoring James R. Wilbanks, PhD, for his services to the Mendocino County Employees Retirement Association and the Board of Retirement. Whereas James has served as a retirement administrator and executive director since January 4th, 2015. He came to us from Oklahoma and brought with him a wealth of knowledge, administrative expertise, and a commitment to education and learning, and a bit of humor. And whereas James has served MSERA as the Board of Retirement with dedication, integrity, and humility. His guidance has assisted the board in making many important decisions regarding policy, procedures, consultants, and investments, advancing the focus of the board on operating as a policy-focused board. And whereas James' many accomplishments include the successful facilitation and implementation of the strategic plan, board work plan, and staff work plan, development of a trustee training program, development and facilitation of Retirement 101 seminars, creation of a new employee orientation video regarding retirement benefits, development of a member newsletter and satisfaction survey, implementation of a staff telework policy, development of business continuity plan, and improvement in public outreach. And whereas James has demonstrated the highest principles of service, collegiality, and respect for MSERA, its board, and members. He has always supported MSERA staff and led them through devastating wildfires, public safety power outages, and lastly, something none of us could have imagined, a pandemic with shelter-at-home orders. Now, therefore, be it resolved that the Mendocino County Board of Retirement recognizes and honors Dr. Wilbanks for his service and expresses its sincerest gratitude. The board and MSERA staff wish James continued success in all his future endeavors. Thank you so much.
Thank you, Madam Chair and trustees. I am humbled and honored to have served the board and members and the staff for the past 5.5 years. It has certainly been a learning experience for me, and I have grown greatly over the time in Mendocino County, and with your help and support, I'm proud of the accomplishments that the staff has been able to accomplish and my small role in everything we've done. So I'll just stop there and say thank you.
Oh. Anyone else?
Catherine,
Jerry?
first time without a tie. You know that things are changing.
So, Kathy, did you have your hand raised? I didn't.
No,
Not sure.
I did, but it was just, hi, James. Thank you for everything.
Yeah. We all love you.
Richard?
So, is Tim here today?
Yes. Yes.
No picture.
Hi,
I just
Tim.
want to say that I have forgotten how many different EDs we have had that I have served with here. But I can easily say by far, I believe you've brought us the farthest of any and have handled the most major issues that we have faced. And I am so appreciative of that as a board member, as a retiree, and a member of the taxpaying community of Mendocino County. I think the fact that you have proven out that I never remember the right term, but working from a satellite location is feasible and productive. And I got to say, I am so impressed how much our staff, I'd go as far as say, as loves you and appreciates working with you. So our next Boris will have a big giant set of shoes to fill. And hopefully you'll help her out when she needs it. And there'll be a point that the path you've gotten us on, she won't need it. So thank you very, very much.
So, Tim, I saw your hand raised, and then I saw Lee after that.
I am muted.
Tim?
Ah, there I go.
Not anymore.
Hello,
No,
am I
now
on
you're
board?
muted again. Not yet. Tim, you're muted again.
Hello.
I see you, Lee. Did you want to say something, Tim? You're muted.
Unmute. Yeah.
Unmuted.
I wanted to agree with Richard and just everybody else. James has really changed things here, and it's been a pleasure to work with him.
Okay. Lee? Lee? Hello? Lee, did you want to comment something? Okay, I guess not. Anyone else? Oh, Quincy? Hi, Quincy. You're muted. You are muted.
Not
There.
to take thunder away from James, but I can't unmute myself once I'm muted. So I don't know if there's some way we should do that better, but I do want to express to James that I think all of us are extremely thankful for everything you've done. And I think that the collegial atmosphere you've created on our board will remain for many years, even after you leave. So thank you.
Jerry?
I know I had my smart remark about your tie, but James, you know how much I love you. We came on the board at the same time, and there were times when we chatted where I didn't think either one of us would make it through 6 months. But thank you for making it such an incredible experience. And what a wonderful policy-driven professional board this is now. And that's because of you. So thank you.
James, I want to thank you for always supporting me as a board chair, because there have been many times I've felt very insecure and anxious, and you've always been there, helping me out, and I sure appreciate it, because I'm slowly becoming more confident. When the board chair term will be over, I'll be confident.
Oh, Catherine.
Any other? Oh, Sherry?
Can you hear
Sherry?
me? Can you hear me?
Yep.
Yes.
Yes.
Oh, okay. We're having problems over here. Julie can't hear at all right now. So we're trying to get the tech over here. But anyway, I just want to let you know that. But anyway, I want to thank James. It's been great. You have definitely left us in a better place than you found us 5 years ago. This 5 years has gone so fast. It's crazy. But thank you for all you do, and good luck, or that you've done, and good luck with your future. I'm sure it will be great. Thank you again.
James, Lee Parker, I'd like to thank you as well. It's been such a pleasure to get to know you on a personal and professional basis. It's like having your own PhD in your back pocket. Anything you wanted to know about investment, you could ask you, and you are such a wonderful teacher. Besides all the other great things you do, but you are the professor. And thank you so much, my friend. Come see us.
Yeah. Richard, I see
Or if I
that
could
you're
add
waving
from
your
Fort Bragg.
hand.
If I could
Dan?
add from Fort Bragg, yeah. So I also just want to add to what others have said, that for people who may be watching our meeting but aren't on the board, I think it's important for them to know that over the years, James has also conducted detailed surveys and produced detailed reports that this board would have otherwise needed to pay, thousands and tens of thousands of dollars to consultants for each of those reports. And so he brought a depth of knowledge and ability that we were really fortunate to have in James, in addition to everything else everyone else has already said.
Richard, did you want to say something? You're muted. No. Okay. Well, don't be a stranger, James. I hope you keep in contact with us. Jeff, you're muted. Can somebody unmute Jeff?
Thank you.
There.
So I just wanted to echo all the comments made about James. I mean, what an outstanding job he's done. And to come from another state, we all know how complex the 37 Act is and a variety of other California laws. And it's just been a pleasure. He's so intelligent and so easygoing and has a good sense of things. And don't let him kid you about the fact that he doesn't have feelings or a heart, because he does. And he's really a great guy.
Well, on that note, shall we go on to our consent agenda? Has everyone reviewed everything? Is there any discussion or possible action regarding any of the consent agenda items? Seeing none, is this approved by unanimous consent? If so, we can move on to the next agenda item. Is everyone in agreement that we can move on?
Yeah.
I guess so. Okay. Discussion and possible action regarding employment agreement with Doris Rentschler for the position of executive director. So we have before us the employment agreement. Does anyone have any comments about the agreement? Sherry?
Can you hear me?
Sherry?
Just a few things. One, the department head raised that it talked about her salary being tied to department heads. And it said, and I'm not sure exactly, and I know we had this issue kind of with James too, except for we got out ahead of James, giving him, an increase before the department heads got theirs. But there is a department head increase that's supposed to come in like July, I think, coming up. And I'm not sure what that exactly means. I think that's probably something that the board could take up at a later date, not today. And maybe that's down the road, 6 months or a year, I don't know. But it does tie to the department head bargaining unit, but basically excludes it from the salary, but says, basically kind of ties it back together a little bit too. So that was one thing we need, you know, going forward, we need to think about that. The other thing was it refers to retirement administrator instead of, I think, didn't we change that to executive director?
Yes.
She's not working? Okay, Julie's not working, so she's coming in with me. But anyway, I think that I think that, and I'm sorry, I can't bring it up without knocking all you guys off, but I think it refers to executive director in, you know, everything else that we've done, but in this, I think it's retirement administrator. So I don't know if we need to make that uniform. And then the other thing, I think there was a paragraph, I think it was number 8, that referred to her as his, that I think we need to.
Right.
Yeah. So I just wanted to mention those were the things that I noticed. But other than that, it's good. It just those few things came to mind.
Any other comments? I have a question about attachment B, retirement administrator job description. I'm not seeing anything there. Is that something that we're going to add, or is that something, I'm not sure.
I can give the agreement a final scrub to make sure that there are no typos, and I will be inserting those 2 attachments before we send it out to Doris for a signature.
Okay, sounds good.
Yeah.
So as far as the job title goes, I thought that it was the retirement board that changed the name, but it wasn't necessarily recognized by the county. I may have gotten that wrong. And of course, this agreement has to be approved by the Board of Supervisors. As far as the pay increase goes, perhaps I misunderstood, but I thought we had spoken, at least with the ad hoc, and it was the understanding that, and I want to make sure everybody's on board. I think the way the contract is supposed to, the way it reads now is that the starting salary is what it is on June 1st, and then any increases that department head gets, the retirement administrator would get. If that's not the intention, then I think that we need to modify this agreement.
Well, at the last discussion, I think that Dan Jardy brought up to, you know, that get the COLAs as do the department heads. That was one of the things that were brought up, because we had a discussion that it is at this particular time, it's slightly challenging issue due to the general economic environment. And so at the very least, that she would receive the COLAs that the department heads receive. But I think it really requires further discussion. I agree.
Thank you.
Sherry?
Can you hear me?
Okay, Dan,
Yes.
you're unmuted.
So the reason that I kind of was a little confused by the way that the contract lays out is because of 3D. If you look at 3D, it kind of throws it back to I don't know why it's excluded. Like in 3D, it says basically you're entitled to all the department heads, you know, everything the department head gets with the exclusion of this. And it talks about the salary. And then when you go back to her salary, then it says consistent with, but it doesn't say, okay, does that mean that she automatically gets it, you know, when everybody else is getting theirs, kind of thing. That was where I had a little confusion, and maybe it's just me, but that's where I had confusion, is when it referenced salary, and then in 3D it kind of excluded the salary.
Well, I think Sherry's raising a good point. I think 3D should end at department head benefits, if that is the intent of the board, that Doris receive the COLAs consistent with what department heads receive.
I agree.
So I want to thank Sherry for pointing that out. I think it was the intention of the ad hoc that the contract aligned very, very, very closely with all the other department heads. And because that was the message we'd heard from board members in the past and from some county staff. And so it was our intention to align the two. And I think with those changes, it will be.
I'd like to add something, not to the contract, but it seems to me we're muted by the host and we can't unmute ourselves without waving our hands and stuff. When we go back to where we have the capability of muting and unmuting ourselves instead of having it done, is that Judy that's doing that?
No, actually, it's county administration has modified Zoom, and we have a license through the county. And so I believe this could be, I've tried to go in and change our settings. I'll ask guys to work on it for us.
Well, I'm unmuted now, so I'm fine. It looks like Quincy wants to get on and say something, but he was muted.
Yeah, I think it's just removed our ability to unmute ourselves, unfortunately.
I haven't been muted by the host. I've muted myself for when other people are talking, and then it takes away my ability to unmute myself, so I can't want to without raising my hands. But then I can't mute myself either, because then only the host has control after that.
Tim, can you wipe off your camera? You're pretty fuzzy looking. Wipe off your camera.
It might be diffraction.
I think it's eggs.
Oh.
Oh.
Oh, there you look better now.
Now it looks great.
There we go.
Yeah.
And Richard,
Okay.
stop waving in front of the camera, would you? It drives me nuts.
Well, we see your hand quite frequently. It blocks everything else.
All the time, you know? Stop.
I'm reaching up to deal with the mute unmute, and so the camera is on that side of the screen and where that button is. I can try to do this and come down. That doesn't work.
Oh, okay.
All right, let's get serious.
So are we in agreement that we need to do a few streamlining processes to the agreement, and that will be something Judy will do for us and bring it back before we
I don't know that it needs to get brought back. It just,
no.
So I think there's a typo that needs to be corrected, and in 3D, I think we need to delete the phrase starting with accept, and I think it's ready to go. So if somebody wants to make a motion as to approve the contract as modified or corrected, I think you can proceed.
So moved.
I'll second.
Okay, any discussion on the motion?
Thank you to the
All in
committee.
favor?
Well, I do want to throw one thing out real quick.
Yes.
The increase that department heads are going to be getting starting September 6th of this year, on average for all of them, is a 3.63% increase. They vary quite a bit across the departments. So that's just an average of all the department head increases that are going to be coming up in September. My understanding of how that's going to work is that the COLA increase first, and then the pay increase second. So as far as I can tell, this base wage appears that it will be increased somewhat. It's hard to say what. I don't see the retirement administrator executive director position on the department head market adjustment given to me by HR. So that's just something to consider, that it does appear the average across all the department head increases is going to be about 3-6%.
Well, I agree. It should not be on the market adjustment survey, but it would, all the department heads, as all employees, would receive a 3% COLA. So it's just exactly what all the other employees get. I mean, the department heads have the same contract as everyone else.
Yeah, 3%, yes.
Okay.
So should we do a roll call for all those in favor? Judy, can you do the roll call for us? please?
Yes, Ms. Stratmeyer,
Yes.
Ms. Forrester,
She may not, she's having problems with her Zoom camera, so.
okay, she says yes. Okay, Catherine Kavnis,
Yes.
Lee Parker,
Yes.
Kathy Smith. Yes. Quincy Cromer, Mr. Knudsen,
Is that me? Yes.
Ms. Harris.
Aye.
Okay, and Dan Judy,
Yes.
approved.
Just as a point of order, I would recommend that one time you unmute us all and none of us mute ourselves, and we'll never get back in again. You can't unmute yourself once you mute yourself.
Julie said the host has her muted.
Right.
Yeah.
And once you even mute yourself, you're out, unless they can see you waving your hand. Looks like Kathy
now
is
Julie-
muted. Kathy is muted. Now somebody needs to unmute her, and then just don't mute yourself anymore. Just be quiet.
Thank you.
I thought I was muted, and then I realized it was the volume button on my wife's computer here. And then when I hit the volume button, I really wasn't muted. I had muted myself on my own computer keyboard. Try that.
All the tricky IT issues that we're working through.
Is Flo from the insurance company going to be on this? You guys seen that in person?
So
This is
I have Callan
like
waiting to
Joe
join our
Biden.
meeting.
This is like Joe Biden's community deal.
Is Julie unmuted? Is Julie, can you hear? Maybe Julie should do a test to make sure she can.
Hi all. Can you hear me
Hi,
now?
Julie.
There you go.
Yes, I can hear you.
And can you hear me now?
Yes.
Okay. All right. Thank you.
So
Thank you.
let's bring Callan in for our investment matters presentation.
Hello, Greg.
Hi, everyone.
Hi,
Hi there.
Greg.
How are you?
Hanging in there like everybody.
We're good.
Great. Well, here's Claire.
Hi, Claire.
Hi, Claire.
Well, it's really good to see you all. I wish we were up there in person and could have our Schatz coffee and pastry before the meeting. I like our drive in the morning going up 101. So I wish we could see you all in person.
Aw.
Likewise.
Well, it's nice to at least see you, even though it's not in person.
Yeah. Well, welcome to my house. So should we get started? Do you want us to get started?
Yes.
Okay, great. So we have a few items to talk to you about today. The first is quarterly performance. And it, without doubt, was the most noteworthy quarter we've experienced in about 12 years. So we all know a lot is going on, and a lot has gone on in the capital markets. So we'll spend time on that. We're also going to talk to you about April performance. And April performance is meaningfully better, though we're still in a hole. on a year-to-date basis. We're going to talk about the investment policy statement as well. Now, one thing we're not going to talk about is an equity structure analysis. And as you all probably recall, we did an asset liability study for you. And after completing the AL study, we mentioned we're going to go through each asset class and talk about how we should structure those asset classes. In light of everything that's going on, we thought it'd probably make sense just to sit tight and see how different strategies perform in this volatile market. This is a test for strategies, structures. We certainly don't want to be making a major change in the middle of it. But also this is an opportunity for us to see how other things are doing. So look before you leap. We don't have that on the agenda today, but we will be bringing it when the time is right. With that, maybe we'll jump into performance. Does everyone have the performance report in front of you? Yes?
Yes.
If I get up, it's not because I'm not vitally interested. It's because I keep losing this on my iPad. So just means I have to go to the other room a little closer to my Wi-Fi.
Understood. Okay. Well, we're to the presentation which says MSRA 1Q 2020 performance. And I'm on page 3 here. And on page 3, we set the stage to share with you what happened with the stock market during the first quarter. And the yellow line here is the current performance pattern of the US stock market. And let's compare that to the green line, which is the global financial crisis, and the blue line, which is the tech bubble in the early 2000s. And one thing that jumps off the page here is the speed and ferocity of the sell-off that we experienced in March of this quarter. It was the quickest we've ever experienced to getting to a bear market. So there are a few things in that. One, we're dealing with 3 different crises right now. We're dealing with a healthcare crisis, which is underpinning everything we have going on today. The second is we have an economic crisis where companies, municipalities have to figure out, how do I operate in a shelter-in-place environment? And the third crisis is a financial crisis where there's forced selling because people under stress need to raise capital to pay the bills. What we're looking at here with the yellow drawdown here is the forced selling. It's the financial crisis that we saw. And during the first quarter, and it peaked about the second to last week in March, we saw a lot of people running for the exits and selling what they could sell to raise cash. And it's not necessarily at that time a prediction of what the economy is going to look like or what's going to happen with our first crisis, the healthcare crisis, but instead it was largely a delevering. Now the question is, well, what happens with our first 2 crises, healthcare and the economy? The healthcare crisis, no one knows. We don't know what's going to happen with it. The economic crisis is going to be a bumpy road for some time to come. And for that reason, I expect that we are not out of the woods yet in regards to capital market volatility and downdrafts. I'm going to flip ahead to page 4 and a little bit about the economic crisis. We've all been tracking these numbers, and we're going to be seeing GDP growth numbers, and we're going to be seeing unemployment rates that don't make sense. The magnitude of economic downdraft doesn't make sense in historic context to us. So having 10% of the workforce immediately go to unemployment is, we don't have a historic precedent for it. So for that reason, we're going to have a hard time modeling what does that mean for the economy and what does that mean for capital markets. There's no model out there for us to rely upon. So another reason why I think we're going to continue to see major ups and downs of the market and the economy in the coming months. On page 5, one of the things that happened in the first quarter was we had a dramatic sell-off in risk assets in general, but in particular, the bond market. So the blue line here is the yield you earn for corporate bonds over the yield of a treasury security. So how much are you paid for taking corporate credit risk? And you'll see the blue line spiked meaningfully. And the only thing that brought it back was the Federal Reserve stepping in to create programs to support the corporate bond market for the short term. If it weren't for that, we would continue to have a financial crisis that, to this point, at least, we've abated for now. Okay, but what's meaningful for you in the first quarter is that blue line gapping out so much means that your bond managers who invested in corporate bonds underperformed their index meaningfully during the quarter by a few percentage points. And it's because they own corporate bonds. So to put the performance for the quarter in context, we have page 6 here. And on page 6, we show first quarter performance and then longer term numbers, 1 year, 5 year, 10 year, 25 year. And a few things jump off the page here. One is stocks in general down 20, 25%. They were down more at one point. March 23rd was the low for them. Small cap stocks did a lot worse than large cap stocks. And that's important to you because in your US equity portfolio, you have an overweight to small cap stocks. So that decision in itself led to the part of our drawdown in the first quarter. Bonds held up remarkably well, up about 3%, but this is if you held an index fund. And we don't hold index funds, we have active managers. Another thing and we'll talk about this in a few more pages too, is down here in real estate, you'll see there's something called the FTSE, the FTSE Nareit Equity Index. Those are REITs. So those are stocks which invest in real estate. And you'll see they went down with the market. But you see this other thing, the NCREIF property, that's private real estate. That's what you hold. And you'll see it didn't have a markdown in the first quarter. Now, that's because the valuation for real estate, for all of the properties, were getting done in February and early March. COVID peaked in March, the stress, and all the valuations we're already in. So second quarter real estate numbers, we expect to be meaningfully down, probably 5 to 10%, because it's really going to reflect what should have happened in March and what's happening in the second quarter. Okay. And it's because the slow valuation cycle for all of the underlying properties in real estate. Okay.
Why is that, Greg, why is that, Greg, when interest rates are so low, you've got lower cap rates, which should raise prices, offsetting, risk. So it depends on the type of property you have. I mean, if you have a loan on a shopping center, that was a bad place to be in the first place.
Yeah. Yeah. So the problem is anyone paying rent? So you own a property, but can it make income? So a few statistics on that. There's this, the NCREIF index is a big index fund provider. And it's largely what your private real estate managers look like. So there are 4 main property types in there: office, retail, industrial, and apartments. So those are the 4 main groups in institutional real estate. If office is about a third of that index, so my office building in San Francisco, right now in April, 86% of companies are paying rent, which means 14% are not. For an office investment. Retail, so that's only 14% of an institutional portfolio, so it's a smaller percent, but 40% are paying rent. That means over half are not paying rent for the month of April. Industrials are holding up pretty well because that's the Amazon distribution centers of the world, and among other things. That's about 27% of the index, and 83% of the industrials are paying rent in the month of April. And then the final one is multifamily apartments. And that's about a quarter of the index, and 90% of multifamily are paying rent currently. So it's interesting that it hasn't affected multifamily yet. But as you can see, and you alluded to, Lee, in retail, it's a real problem if you're only getting 50 cents on the dollar in rent right now.
How much of the portfolio did you say was in retail? What percentage?
Well, this index I'm alluding to, Lee, is about 15%.
Okay.
So flipping ahead to page 7, we have up in the upper left-hand corner, we have GDP growth, and we've already seen one negative number of GDP growth for a first quarter, down 4 or 5%. No one knows what this number really is going to be for the second quarter, where we're at right now, but it's going to be worse than this. And we could be looking at a 10 to 15% GDP decline where we're at right now. But again, we don't have a lot of models for this, so we really don't know. Inflation, right now over on the right-hand side, we've all been following what's going on with the energy market. It's an incredibly deflationary factor right now. Low oil prices is great for the consumer if they're traveling. But we're not traveling, and there's not a lot of benefit for us for really cheap gas right now. And it becomes deflationary. And deflation could very well be a factor that we become worried about going forward. There's still a lot out about that, and we don't know. But deflation prices going down across the board is terrible for companies and it's terrible for municipalities because it means your income goes down even though you have fixed expenses. So deflation is a really bad thing for the economy, and it's something we might have to become worried about. You might have seen today the Chairman Powell of the Federal Reserve said, we're not interested in negative interest rates in the United States. We're not going to go that way. But if we start staring deflation in the eye, we might have to do something to stimulate the economy. Chairman Powell has pretty much said this is a fiscal problem at this point, meaning Congress has to spend to get us out of the hole. Talking about the consumer, a couple interesting charts here. On page 9, what do we have to worry about? Well, there are a lot of things, but on page 9 here, a lot of people aren't working right now, and ask the question, well, what does that do to people's personal finances? It's, what's the old saying? It's a recession when your neighbor loses their job, and it's a depression when you lose your job. So there are a lot of people in a personal depression right now economically. And we are in a global recession as well. But here on this chart, you'll see that about 55% of people in the United States spend every dollar they make or spend more than every dollar they make, okay? So if you're not making money, this becomes a real problem for the consumer, which is 2/3 of our economy. Consumption is 2/3 of our economy. And then you ask the question on the right, well, do these people have a rainy day fund to fall back upon? And half of the population does not have a rainy day fund. So the economic pain for individuals can become very pronounced very quickly. Now, we all know that I mentioned that the Federal Reserve can't do a lot to stimulate the economy at this point. They can just make sure capital markets are functioning appropriately. And in my assessment, I think they've done a really good job in that regard. The financial markets are functioning. You can sell securities. You may not like the price, but you can sell them. So all of that is operational. And the question is what's going on with the underlying economy. And Congress has spent trillions of dollars. Put it in perspective, the US GDP is in the $20 to $22 trillion per year range. So if we spend 22 trillion, it's about 10% of GDP. We're filling about 10% of the gap. But that's the case if it's appropriate, if it actually gets to the place that it needs to be spent. So the transmission mechanism of spending $2 trillion is not a one-for-one trade-off in supporting the economy by 10%. And I've been a little surprised that the economy or that the market rebounded so strongly in April and to date. I do wonder if some of the money from the stimulus is actually going straight into the market right now and not necessarily stimulating and not going to economic activity. I already talked about inflation and GDP growth, and so maybe flip ahead to page 16 here. And here on 16, we see what the stock market did in the first quarter. A few takeaways here. I already mentioned that large cap stocks did better than small cap stocks. The gap is pretty pronounced. And then growth stocks did a lot better than value stocks. And what the virus is doing in some ways is it's accelerating changes that have already been occurring in our economy. So old school businesses that aren't relying on technology and can't survive with social distancing are doing even worse than they were before. And then the new businesses happen to be very well suited to survive with social distancing. So we've seen this huge dispersion of the winners and losers, and they happen to be a lot of the winners and losers that we've seen over the last couple of years. So the big tech companies are doing comparatively well, and then a lot of the old line industries are doing really poorly. And energy jumps off the page here, right? Energy down about 50% in the quarter. On page 19, and this goes a little bit to Lee, your question earlier about real estate. And there are a lot of numbers on this page, but the takeaway is that for the last year, real estate and unlevered real estate property returned about 5%, let's call it. And 4.5% of that came from income. So people paying rent and that rent accruing to the benefit of the property owner. So the vast majority of the returns over the last year have come from that. So if that goes away, then the returns go to zero. And then if your future expectation for income goes down, then the property value goes down itself as well.
With low interest rates, your cap rates go down as well.
They do. And if you can borrow at a treasury rate, that's particularly true. If you have to, with corporate bond yields going up, the cap rates have been sticky. They haven't gone down a lot. So some people discount their liabilities using a corporate curve. And over the quarter, those yields actually didn't go down. Even though treasuries plummeted, 10-year treasury below 1%, the discount rate stayed at 3.5%. And that same thing will be going on with cap rates as well, where the discount rate for future cash flows that are risky have not gone down like treasury rates have gone down.
Thanks.
Yeah. I don't know if any of you looked at refinancing. It's surprising to me that those rates really haven't come down like you would expect. They have not come down like the treasury yields. Okay. So that's a little bit of backdrop about what's going on in the economy and what went on in the first quarter. I was going to hand it off to Claire now, and she was going to talk about your portfolio specifically and also touch on April performance. But before getting to that, does anyone have any questions or any topics you all want to talk about?
Greg? Am I unmuted?
Yes.
Just caught on the news this morning about a new initiative to go after China with sanctions and whatever else, which troubles me. I was just wondering what, being no fan of China, but realizing that the Chinese own us when it comes to our investment in our bonds and they park their money here. Is there any thinking that this might be unwise, considering how heavily invested in this country the Chinese are, and Chinese government behind them.
Yeah, you know, Jerry, I haven't looked at that yet specifically, the news today about China, and so I don't know, but we're in co-opetition with China. Right? We cooperate and we compete.
That's a good one.
And but we're leaning more towards competition right now, which is generally not good for economic activity.
Yeah.
I don't think it does anything in the short run right now. It's not like there's a huge burst of trade that's being held up. But in the long run, it's a semi-adversarial relationship, which probably isn't good.
Yeah.
So I don't know.
It's okay.
I don't have anything
Thanks.
on that. Sure.
Okay, great. So let's take a minute to look at your total portfolio. I'll hit the punchlines first. The plan was down 16.9% in the quarter. A very sharply negative return, frankly, in line with what we would expect given the capital market environment that Greg described, and the fact that your portfolio has a high allocation to public equity. We know this, it's a high risk, high reward, long-term focused portfolio. All of the asset categories in the plan, public equity, domestic equity, international equity, fixed income, all underperformed their specific benchmarks for the quarter. Fast forward just 1 month, at the end of April, we had a bit of good news, a little bit of relief. Again, focus is still long term, but of that bit of relief, the plan was up 8.5% in April. So making up some of the losses that were experienced in the first quarter, and all of the asset class composites outperformed their benchmarks in April. So massive reversal. Notably, the plan was successfully read at end of March, beginning of April. So in this report, we have the kind of the first part of that rebalance, asset allocation broadly back in line with targets, but the second half of that happened just a day or so later on at the first day or so of April. The intent is not to market time with a rebalance, but frankly, timing was on your side. So rebalancing into weakness seen in the first quarter in April did allow the portfolio to benefit from all of those gains seen by public equity markets in April. Looking at this slide 25 here, slide 25 captures total plan growth over the last 15 years. So 15 years ago, the plan was at about $275 million. That total has grown to about $500 million over the last 15 years. And what's notable to me on this graph, it is up and to the right over time, but the volatility in the last 2 years that we've experienced and felt has been very notable. 2017, of course, saw strong gains. So you can see that as the blue line sharply spiked upwards. We had a sharp drawdown in the fourth quarter of 2018. 2019 was marked by pretty remarkable investment gains. And then just about all of the gains we experienced in 2019 were retraced in the first quarter of 2020. If you add April to this, the plan's back above $500 million at about $506 million. So the plan total is right above that kind of second dotted line from the top. And that puts us right back where we were about a year ago. So more detail on that on slide 26. Here we look at contributions to that plan growth over time. The top chart breaks out investment gains in the blue bars, and then net distributions from the plan to pay benefits in the green bars. And that's shown for full calendar years, 2010 to 2019. Then on the bottom, we look just at the first quarter of 2020. So what strikes me here is that if you look at the top right, and I really already mentioned this, but those investment gains of $97 million in 2019 almost exactly match the investment loss plus the outflow to pay benefits in the first quarter of 2020. Investment returns totaled about negative $95 million in the first quarter, and about $2.5 million left the plan to pay benefits. So again, roughly back to where we were about a year ago. The other thing to note on this page is that net investment column, kind of in the middle on the bottom chart. This captures, again, part of the total rebalance that occurred at the end of March and the beginning of April. And that really did bring actual asset allocation back in line with target. It does show a $10 million cash position that was very temporary as cash passed through, that was quickly invested into international equity at the beginning of April. So in total, and again, this isn't fully shown here as it did occur partially at the beginning of April, about $3 million was rebalanced back into domestic equity, about $14 million into international equity. So those were the two hardest hit asset categories in the first quarter for both the broad markets and for this portfolio. And then about $19 million came out of fixed income fund, those rebalances back into equity. So the plan ended the quarter with about $466 million in total. Slide 27 has actual asset allocation versus the target. Again, the rebalance brought these back in line. Importantly, the new target adopted will shift this pie chart when the capital is called by the two infrastructure managers. At that time, the largest changes will be international equity coming down by about 4%. And then the infrastructure allocation will be about 6%. So 1% coming out of domestic equity, 1% out of fixed income, but the bulk from international equity. It is worth mentioning that you did adopt a new target and we're sticking with the old. Is that what you would expect? Is that the right way forward? Greg, Robert, James, and I had a conversation about this, and I think it is important to be full about where you hold that capital until it's called, and I think it makes sense to stick to your current target in the meantime. So we expect, best guess is that in talking to the two infrastructure managers that you've hired, IFM and JP Morgan, they expect to call capital probably not before the end of the year. Could be a quarter earlier, could be later. But we do have some time. They will give you some notice before that is called. And it's hard to justify holding on to some sort of interim target. So I think maintaining the current asset allocation to that original target makes sense for now. And we can use the opportunity when that capital is called for by the two infrastructure managers to see where we are in the portfolio at that time and use that as an opportunity to rebalance again. Are there any questions on that? Any comments? I think we'll talk about the investment policy statement in a bit. There is importantly a sentence in there that does cover that, saying that any transition to a new target can occur gradually over time. So I'll be sure to point that out. I'm going to skip slide 28 in the interest of time. 29 shows asset allocation versus peers. This doesn't change much quarter to quarter. As we have talked about time and again, this portfolio does have a higher allocation to public equity. That makes you different from peers. That has driven success for this program over the long term. In the recent quarter, that was the driver of performance versus other public equity funds. Of course, you're adding that infrastructure allocation. So circled on the right of this page under additional real assets, you will have an allocation there soon enough. And that allocation to infrastructure, of course, should help dampen rather some of the quarter-to-quarter volatility that we see versus peers. Slide 30 captures manager level data So all of the detail of the asset allocation and movement in the quarter. What I like to look at on this page is really just as a good check that your managers remain in balance within each asset category. So Greg talked about the magnitude with which growth has continued to outperform value, and that continued through the first quarter. That was a big focus of the rebalance that was executed. So your growth managers tended to outperform your value managers, and the rebalance worked to bring some of those back in line. So looking at the percentage weight under your large cap, mid cap, small cap, et cetera, managers, here you can see about $3.6 million moving out of Harbor. That's the large cap growth manager. The other half of this, seen in the April report, was about $3 million into Boston Partners. So bringing those two allocations back in line. Within small cap here, you can see the disparity between the growth and value manager allocations at the end of the quarter. Prudential at about 1.5% of assets, AB at about 3.2% of assets. At the beginning of April, about $5 million was rebalanced back into Prudential and $1 million out of AB. So bringing these back in line to about 3% each of the portfolio. International equity. Again, international equity was an area of weakness in the quarter. Assets were rebalanced back into international to bring the total back in line with target. At the end of March, early April, about $4 million went into Harbor, $7 million into Oakmark, and about $3 million into Mondrian. So that brought each of these developed markets managers back to about 5% of plan assets, so back in line. And then lastly, fixed income, another $6 million was rebalanced out of fixed income at the beginning of April. You see part of that rebalance here, and that brought Dodge & Cox and PIMCO back to about 10% of the portfolio each. So certainly some dislocations seen given the performance in the quarter, but all of those balances were brought back into line with the rebalance at the end. Performance for the total fund is on 31. As I noted before, the plan was down 16.9% in the quarter. That was versus a negative 14% return for the target. That performance landed in the bottom of the peer group. It also pulls down the 1, 3, and 5-year returns. Over the longer term, 7, 10, 15, those results are all still in the top quartile. So the short term has been extremely volatile. Longer term results remain strong. That last 15-year annualized return is actually broadly in line with expectations, 6 to 7%, a bit below. But that includes both the GFC, the global financial crisis, as well as the current quarter COVID drawdown that we've seen, the current recession, financial crisis that we saw. Over that 15-year time period, including those two drawdowns, the plan is ranked in the 7th percentile of the peer group. So again, a lot of short-term volatility. Over the long term, results remain strong. Calendar year returns are on 32. And then we have fiscal year returns on the following two slides. The investment program is represented, the performance of the investment program over calendar years is represented by that blue dot. Not a new story that the blue dot tends to be either the top or the bottom of the peer group. And that's certainly been true in the last few years. 2017, the plan ranked 2nd among public peers. 2018, 97th, 2019, 8th. And for the recent quarter, so just that 1 quarter time period, in the bottom quartile at 97. I mentioned fiscal year results, really much of the same story. So starting on slide 33, and then on slide 34, we have the following 5 years of fiscal year returns. I went through and counted of the last 9 full fiscal years. The program has landed in the top quartile 5 of those fiscal years, in the middle at 40th about once, and in the bottom quartile 3 times. That's not including the recent fiscal year return. Current fiscal year to date return through March was negative, return of negative. For the program is about negative 3.6%. So still negative, certainly better than negative 11. We've got 2 months to go on that. And then cumulative gains are shown on slide 35. So that's cumulative gains over 15 years, the blue line representing the investment program, the green line representing the target, and the blue line does remain ahead of the green. So your investment dollars in 2005 still worth more today than they would have been invested in just index funds. The first quarter of 2020 certainly did narrow that, that gap. And then in the interest of time, I'm going to skip slide 36 and 37, performance on 38 and 39. This shows the returns for the program's domestic equity investments. And from a high level, 1 quarter returns are ugly. The last year is as well. That's not a surprise given what we've seen in the capital markets. And then you could almost draw a line down the center of the page. 7 and 10-year results are quite good. 8.5. So I'm looking at the total composite, 8.5% gain annualized over 7 years, 9.5 over 10 years, and then 15 results at about 7.4% annualized. And then in April, the domestic equity composite was up about 14%. So down 24 in the recent quarter. Some of that made up in April with a gain of 14%. The Russell 3000 for comparison was up 13% in April. Greg hit on this earlier, but what's also noticed about what I also notice here about the performance of your domestic equity composite is that for the last 3 years in particular, your value managers have trailed their benchmarks and your growth managers have outperformed their benchmarks, especially within large cap and small cap. And that was true again, value or more deeper value leaning in this presentation. And that's consistent with the strategies with which they were handed to outperform your value managers have trailed. You put them together and they do tend to.
Can the rest of you hear her?
Yeah, Claire, we
Not
might
very well.
be losing you every once in a while, Claire. Can you hear us, Claire?
I think we
Now I
lost her.
can't.
Okay. She only lives in the high-tech capital of the world, San Francisco. I guess the internet connection must be down for Claire.
Or maybe getting in on that.
Everybody's coming online for the 10 o'clock meeting.
That could be. So Claire was on page 38 and 39. And I think she was noting that your value managers have underperformed relative to index and the growth managers have actually done pretty darn well. And the same is true in the domestic and international areas. And then the bond managers also meaningfully underperformed. And that was a lot to do with the spread widening. And up until the Federal Reserve announced all of their initiatives, all active managers underperformed. Everything underperformed Treasury securities. So you'll see that there. I think the final comment on this page, on page 13, is that the real estate numbers, again, we're probably staring at a negative number for second quarter there. and it's artificially high as of the measurement date at the end of March. With that, I think it might be useful to flip over and look at the April flash report. And Claire alluded to it. So in the month of April, in this April flash report, you'll see the work Robert was doing to rebalance the portfolio was completed. And you'll see in that net new investment column, you'll see a lot of money was moving around. It just sits in a day moving from one account to the other. So you see the rest of the rebalance that Claire was alluding to was completed in the first day or two of April. And then you stood at $506 million at the end of the month. And then for the month of April, the total plan was up about 8.5%, above your target of 7.7. But we, on a fiscal year to date, still down 3.6%. So looking a little better, but still down on a fiscal year to date basis. And in here, you'll see that for April, most of your managers outperformed. If you roll them all up together in April, most of them did well and outperformed. And I think the rebalancing was good policy. It was good to stick to that policy, and it wasn't an easy decision if you remember what the world looked like in the last week in March. And now you're actually a little overweight bonds, and it might be another, underweight bonds. So it might be time to do a small rebalancing again. In volatile markets, up and down, extreme markets, it's good to rebalance. It's to your advantage. So might be worthwhile taking a look at that again. So that's the performance update. I don't know if Claire, you're back on.
I am here. I apologize.
No problem.
Thanks, Greg, for carrying that through. So just in case I cut out again, I'll try to be fast here, but the next item I wanted to talk about is the investment policy statement. If everyone has that. James and Robert and Greg and I had a really good dialogue about the investment policy statement and running through with suggested edits throughout. We've redlined the final description of edits suggested. And there's really three main changes. And then a handful of language and clarification updates. So the first main change starts on page 19 of the policy statement. I take that back. The first main change starts on page 5 of the policy statement. And this was to embed the investment beliefs that the board adopted last year. I think these are a great statement of the foundation on which the program is built. There was a lot of good dialogue by the board that went into adopting these and designing these. And so embedding them here in the investment policy statement makes a lot of sense. So that's the first change. I think in total, adding those to the investment policy statement really do help fortify this document as something that anyone can pick up and really have a good understanding, including board members, have a good understanding of the program, the goals, and the beliefs and philosophy behind it.
He's fading out again.
There is a small edit on 9. Uh, mm, Greg, do you want to walk through these, or should I keep trying?
How about I drive
There's
for?
an edit on. Okay, sorry.
Yeah, yeah. I think you're coming in and out a little bit, Claire. So the investment policy statement, we added the investment beliefs, and then we had a few stylistic changes with language, and then the target asset allocation is added later in the document, and we updated it to include infrastructure. But importantly, the target allocation will not move immediately to assume you have 100% infrastructure, because you don't. And we'll slowly have a glide path as the infrastructure capital is called and invested. So the asset allocation will slowly shift over time as capital is called and invested into the infrastructure funds. And we added a section about infrastructure and the return expectations. And those are the major changes. So I don't know if you've had a chance to review, or if you have any questions, or if there's anything you want us to expand upon.
I'm good.
Okay. Great.
Yeah, looks good.
So
Greg,
we would need a motion to approve the investment policy statement as presented, if that's the pleasure of the board.
No.
Oh.
I have some questions. I noticed that we had talked about, and I'd hoped to see in our investment policy statement, the inclusion of direct commercial real estate lending as an opportunity for us, and define that, which would take a short definition. I mean, I look at my former business and see my old clients making and collecting like 6% fixed income, and with no loss of income through this period at all on their mortgages. And if mortgages are a hedge against your equity, or debt, bonds are a hedge against a declining equity market, there's no place better to be in the debt market than in direct real estate lending, in my 45 years of experience. So I'd sure like to see that included as an option in our investment policies. This is the time to do that. Otherwise, we wait another 2 years to have this discussion.
Well, we can update the investment policy statement anytime we change the actual investments in the plan. And we should do that anytime we change the investments in the plan. So to the extent the group ends up making a investment in commercial mortgages, at that time, then you'll just readopt this policy statement, and so, for example, change the target asset allocation to include it. So what this is meant to do is reflect all of the investment decisions that have been made to date. And then if you ever change it, then you update the policy statement.
Well, I thought that's what we were going to do. This topic got shelved for a long, long time, and this seemed to me to be the time that we were going to address this and at least get it in our policy statement. And so that we then have the opportunity, should it arise or we want to move forward on it, we don't have it in our, we end up with this chicken and an egg deal if we don't have it in our policy statement.
Was there a discussion to put it under fixed income? Or no?
If I may, Madam Chair.
Yes.
So I do want to remind the board of our process of working through. We started with the asset liability study. As a result of that, we adopted a new asset allocation. We were looking at a number of new asset categories. We adopted infrastructure as a new asset category, went through all of the work to implement that. And with the asset allocation complete, and then finishing the infrastructure search, the next steps in our process were to move through a methodical review of our existing asset category portfolios, looking at the composition of each of those for effectiveness and efficiency. And Greg mentioned at the beginning of his remarks that we were not talking about domestic equity today because of the violent market volatility we've been dealing with during the pandemic. So originally our plan was to talk about domestic equity structure today, but that's been put off because of pandemic. We will turn to that next quarter, I believe, if things return to something closer to normal in the financial markets, and then proceed through the rest of the asset categories reviews. The point that Trustee Parker is bringing up, the direct real estate lending, we were thinking we would consider that when we were reviewing the, Greg, remind me, was that during the real estate or the fixed income review? I can't remember where we had that. Was that in fixed income?
Fixed income.
Okay. So when we get to the fixed income review, our plan was to look at the direct commercial real estate lending as part of the overall fixed income portfolio review. So it's not a, we're not ignoring the information. It's just we're not there yet in the process, and we saw that less as an asset category, as an investment within the fixed income category, and we'll do that when we get to that review. Does that, Greg, am I on board with what we had discussed as our process of getting through this?
Yeah, that's consistent with everything we've talked about before. So this policy statement is describes what your current investments are and what governs you currently. And if we go through and change the investments in U.S. equity, international equity, bonds, commercial lending would fall into that, or real estate, then we go back and we update the investment policy statement.
Thank you. So is there a motion to approve?
Someone else do it.
I'll make a motion to approve.
I'll second it.
Any discussion?
I'd just like to say, I think it's great the way our beliefs, our outline of what we believe in, was included in our policy statement. I think that was a very succinct thing to do. And thank you for developing that, James.
Oh, I played a very minor role in that.
Any other discussion? Okay, can we take a roll call vote, please? Judy, can you take the roll call vote?
Yes. Sherry Shetmeyer?
Yes.
Julie Forrester?
Yes.
Catherine Kavanaugh?
Yes.
Lee Parker?
Yes.
Kathy Smith,
Yes.
Quincy Cromer,
Aye.
Tim Knutson,
Yes.
Geraldine Harris,
Aye.
and Dan Jurdy.
Yes.
Thank you. Approved.
Motion passes. So, Hank, do you have additional topics to speak about as far as the investments?
I think there was only one other comment I forgot to mention up front is James, Robert, Claire, and I got on the phone a few weeks ago to talk about distressed credit strategies. In light of market dislocation, we asked the question, were there any opportunities we should be considering right now? And you may have heard of these funds being raised. There's some massive funds being raised, and something called TALF, Troubled Asset Lending Facility, I think it's called, or I kind of confuse the names, but TALF. And we took a look at it, and we looked at how much fixed income allocation you have, which would be the sourcing of the distressed credit. And we thought there could be some opportunities there. TALF may not be as great an opportunity as it was in the global financial crisis. But you have so much equity exposure that if there is a rebound, you're going to benefit from it, from your equity exposure. And the distressed credit strategy will be highly correlated to that. So we didn't think it was a diversifying strategy or really something that would outpace equities if the scenario plays out where they both do well. So we just wanted to let you know that we were thinking about it. We were looking at other opportunities for you, other things to consider, but we thought it wasn't something we should pursue at this time.
Any other discussion on the distressed options?
I think
Okay.
if we did look at companies that deal with distressed assets, from a moral and ethical standpoint, I'd like to take a real serious look at the company's track record. There are players in that market who are extremely unethical in the way that they treat businesses. It's like talking about China making bad loans in the third world just so that they can foreclose down the road. Well, some of these troubled asset companies are just ruthless, and it's not the kind of thing that we would want to participate in. Others are good business people, but you'd really want to be careful about, working with people that would not represent our values.
Point well taken.
I think that's all we had, Catherine.
Okay, well, thank you very much for your wonderful presentation as always. And we look forward to seeing you next time.
Thank you.
And
hopefully in person.
Yeah, hopefully so. Well, it's so good to see you all. And as always, please reach out to us if you have questions or any comments for us. So thank you so much. And I hope you have the rest of the meeting goes very well.
Thank you.
Thank you.
Thanks,
And
Greg.
safe travel
Thank you,
back to your
Claire.
home.
Bye, Greg.
Bye, everyone.
Take care.
Bye.
Robert, did you want to say something?
No.
No. Okay. Looked like you wanted to say something.
Madam Chair, I might suggest this would be an opportune time to take a short break.
To take a 15 or 15 minute break. What is the board's pleasure?
That's
10
good.
minute or
Please.
Yeah, 10 minutes. Well, I have an 11 o'clock I have to be on, so I don't know how much longer this is going to take, but
Okay, let's do 10 minutes then and try to be back at 10:15.
If we say 10, it'll probably be 15. 15, it'll probably be 20.
Jerry?
Sorry, I just found out we have a leak over at Suite A.
Oh. A leak, a roof leak from the roof?
Toilet leak.
No. Oh. Sherry, are you there?
Yes, can you hear me?
Yes. Okay, looks like we're ready. Everybody's here. We're ready to reconvene. The next item on the agenda is discussion regarding the board work plan. And so I'll defer to James.
Thank you, Madam Chair. Trustees, you have the board work plan before you. I will run through very briefly some of the projects here. Obviously, we're continuing to pay benefits. We don't miss those. Even in the environment, this pandemic environment where we are working 98% remotely, we are still getting the benefits out on time. The historical benefit review project is continuing. We are still working on getting that moving. Everything else on the page is either in queue or a regular review process. Turning to the second page, you'll notice the first line, the client feedback monitoring. We do not have information there. The surveys was not a critical item, so we have not been sending those out with our monthly retirees. So we don't have information there. We did finish the communication metrics. We do not have those updated. Again, not a critical something that we have to get done. So those have not been updated for the first quarter, but we do have the information at this point. The last page, we have a number of items in queue, and you can see at the bottom, we've completed the asset liability study, and with today's adoption of the new investment policy, we've completed that as well. We do still have new policies or items to add to the investment program in queue for further review down the road. With that, I'd be happy to answer any questions.
First time it comes through and then it becomes a happy face on the next one. Is that the way you're doing it?
So the smiley face, the happy face is just when it's in a positive status. A check mark means it's complete, so it will fall off the report next time. Something that is a smiley face you can expect to see again in the future. And I hope to continue seeing the smiley face. So,
James, I have a question. Were you able to issue paper checks to the remaining people who don't have direct deposit?
yes, we were. Yes. I will. We have encountered a very intriguing issue with a couple of our retirees who specifically received paper checks.
Can everyone
We had
mute
to.
cameras? I'm having a hard time hearing James.
So people are able to mute and unmute now, it seems. So if you're not talking, I think you can just mute.
Okay. We had an interesting issue with a couple of retirees that received paper checks. They had concerns about the COVID-19 virus, and I don't know where they got their information, but when they received mail, before handling the paper checks, they elected to microwave their checks. So that invalidated the checks. If you're watching this at home, please do not microwave your checks. It ruins them, and you will have to have the check reissued. You should know that the staff at MSERA is taking all precautions feasible to ensure that we are treating everything with the utmost safety and respect, and that anything you receive will have been handled by individuals with proper protections. So I'll just stop there. Yes, we are able to still send paper checks. I said we're operating 98% remotely. Staff members are going into the office. Only one person at a time is in the office at this point. And that's all, we're coordinating all of that. We have one person that will go pick up mail from the post office, bring it to the office and leave it there. The next day, another person will come in and image all of the documents that need to be imaged. And then those will get put on the network drive where everyone can retrieve them and work on them as needed. When it was time for the benefit payments at the end of the month, we had an input. One of our staff members was in the office processing the benefits and printing the paper checks. So all was done as normal, just as if we were in the office.
Well, I think it's wonderful that we haven't had any, issues other than the microwave issue. It's very nice.
I will say, shifting to teleworking operations has, there were some issues we encountered up front, but staff have stayed in close communication. For a long time, we've had a weekly huddle meeting. With the onset of the pandemic and shifting to teleworking almost exclusively, we've increased that frequency to twice a week, just so we could identify and solve problems as they came up and ensure we had sufficient communication among all the team.
I just also want to thank Judy for her consistent availability and willingness to help whenever anything came up. And I really am grateful and thank you, Judy.
She's been great.
Welcome. So is there any more discussion about the work plan? Okay, then let's move on to the quarterly budget update.
Thank you, Madam Chair. Trustees, you have the quarterly budget update before you with the spreadsheets and the narrative that Robert has drafted. I will point out, as we discussed last time, the legal expense has been much higher than anticipated. And you can see that in the tables, and it's explained in the narrative there. With that, I'll stop and be happy to answer any questions you may have. I'm either boring everyone to death or Robert did a great job of writing a memo.
Don't say that.
Well,
I'm waiting for someone else to make a motion.
I don't believe a motion is required here.
Okay, well,
Yeah.
you said move to approve, so I thought, okay.
Not on
Okay,
item,
so-
on
Okay,
item
I'm on the-
7, it's just an update.
Okay, I'm on the wrong one, that's why.
Okay, then, if there's no further comment or discussion, we can move on to discussion and possible action regarding proposed fiscal year 2020 budget amendment.
Thank you, Madam Chair. Trustees, you have the proposed budget amendment before you. And the spreadsheet shows you a number of comparisons there for reference. The penultimate column, or third to the last column in that spreadsheet, is the proposed budget amendment or the proposed amended budget. You can see we are recommending an increase in the legal expense by 75,000 and reducing the contracts by 27,000. And I would recommend a motion to approve the proposed budget as presented.
So moved.
Second.
Is there any discussion on the motion? Do we need a roll call vote on that?
Yes,
or
we
can
do.
we just, okay.
Yeah.
So Judy, can you do the roll call? Sorry.
Ms. Schattmeyer,
Yes.
Ms. Forrester,
Yes.
Ms. Cavanis,
Yes.
Ms. Smith,
Yes.
Mr. Cromer,
Aye.
Mr. Knutson,
Yes.
Ms. Harris,
Aye.
and Mr. Jurdy.
Yes.
Thank you.
Motion passes. And on to discussion and possible action regarding proposed fiscal year 2021 budget.
Thank you, Madam Chair. Trustees, you have the proposed budget before you and the narrative explaining the overall changes. I will point out the changes are very much in line with the with the just adopted budget amendment. No significant changes in terms of programs or objectives or projects. We built this budget as essentially a baseline budget. With the new executive director coming on board, we wanted to get this budget approved so we could continue operations. But Ms. Rentschler will certainly want to come in and identify and work with the board for the ideas and objectives that she'd like to see the organization put together. You should reasonably expect there to be a budget amendment in line with those at some point during the fiscal year. But we need to approve a budget at this point so that we can start the year with a budget and continue along the programs and with our existing projects and priorities.
James, just a question. We had an audit and budget committee. I believe after we acted on adopting the budget, we agreed we didn't need a budget committee anymore, but we still have an audit. I'm sorry, we didn't need an audit committee, but we still have a budget committee.
No, sir.
Would I have that backwards?
Yes, sir. It's no longer budget oversight, but it is still an audit committee.
Okay, got it.
Okay, and the budget oversight is the entire board.
Yes, ma'am.
Okay. Is there a motion to approve?
I'll move to approve the fiscal year 2021 proposed budget
I'll second.
as presented.
Sherry seconded?
Yes.
I seconded, but I was muted.
Oh, I'll let Tim have it.
Is there any discussion on the motion? Okay, we'll do a roll call vote. Judy, would you please call the roll?
Ms. Schattmeyer,
Yes.
Ms. Forrester,
Yes.
Ms. Cavanis,
Yes.
Ms. Smith,
Yes.
Mr. Cromer,
Aye.
Mr. Knudsen,
Yes.
Ms. Harris,
Aye.
and Mr. Jurdy.
Yes.
Approved.
Motion passes. Okay. Now we're going to move on to discussion regarding the administrative report.
Thank you, Madam Chair. Trustees, you have the administrative report. The only item included there is an update on our COVID-19 pandemic operations. As I alluded to earlier, our operational plan has worked very, very well. And because it has worked well, it is my intent that we will be relatively conservative in terms of returning to the office. There is, because we've been able to effectively continue our operations remotely, there's less upside than there may be for a number of other organizations to returning to the office as soon as possible. But the risk still is very, very real. So we will be conservative in returning to the office and make sure we're protecting our staff and members in doing that. You know, we will still absolutely get all the work done. It's just a matter of protecting our staff and making sure everyone is safe. So I'd be happy to answer any questions you may have.
Thank you very much, James. I don't have, really, I don't have any idea when the county will relax the SIP directives anymore. I guess a lot of it is now contingent on testing availability. So it's just a wait and see, I guess.
Madam Chair.
Yes.
I have a question I think is most related to this as any other topic, but is it our belief that we're going to continue doing the Zoom conference meetings, or is there some intention in the near future or even next month to return to a regular board meeting in person?
I don't know that, an answer to that question.
If I may, Madam Chair, I would say,
yes.
And again, next month I won't be here, so there will be different leadership looking at things and making decisions. It would be my baseline to be conservative. And as long as the executive order is in place that allows us to have meetings via video conferencing, I would recommend that we continue to do so because there is a risk if we start coming together too soon to everyone involved. So that would be my recommendation, is that we be conservative as long as we have the option to meet like this. I would recommend that the board strongly consider doing so, just to protect everyone involved.
Catherine?
James? Yes.
I'm less concerned about the board meeting because we can carry it on this way. But I do have some concerns about our members and their ability to come to the office and find a real person. Filing for retirement is always a bit stressful, even though people handle it with a great deal of positive anticipation. But that real person who's there is important. So my question is more about when you think the office might open and there would be face-to-face. I mean, it's not exactly face-to-face in our office anyway because of the security situation that's been set up. But any thinking on that from you, Catherine, or from James?
Well, I think that some of the retirees or people who are close to retiring, it has something to do also with comfort with technology. I mean, there are people who prefer the face-to-face, and then there are other people that they're okay with, emails and email attachments and forms that way. I think the email version and the technology is pretty advanced and well thought out, planned out for the retirement association, so that if worst case scenario, it isn't too arduous of a process to do it without coming in the office if necessary. But I agree with you, it's nice. It's comforting to actually sit down and talk to a person. So we'll just, I guess, see how it goes.
So I'd like
I
to
will
chime
say-
in on that.
Richard,
Am I unmuted? Yeah.
you're unmuted.
So as much as I've not a lot wanted to do this, I've become deep.
Oops.
We
Are we
lost
back
you.
on? Am I back on?
Yep.
Hello.
I can hear you are. Hello.
Can I go now?
Try
Yes.
again.
Okay. So anyway, today's meeting, I would juggle 2 other phone conferences about issues with the public health orders, about new infections on the coast at the hospital employee, 54 people that work at the hospital being tested. This thing, you let your guard down and it slips in. And I think this board has, I believe, if I'm not mistaken, 4 people who are in the high hazard area that are participating in these meetings by Zoom. So I think it's really important that we continue to meet this way for a while. And then in regard to our members that need assistance, I think that some serious practice by staff with Zoom and screen share will help greatly in keeping the distance that I believe is required. The public health orders are going to things like a stable group of 12. Well, if all of us were in one room, that wouldn't be a stable group of 12, but we would take that contact back to whoever our quote unquote stable group of 12 is. So 12 becomes 144 in one step, and then it becomes 1,728 in the next level. So, the confidence level of people that haven't been infected, or say where county is pretty safe, it hasn't happened, is not well placed. And I think for our members and for us as a board, I think it's very important that we be very cautious. Things are coming to light on a daily basis about, kidneys, hearts, certain inflammatory issues with kids. You're contagious before you're shown to be contagious. We just need to get a little farther down the path. Our public health officer will be changing the order. The governor is in some ways succumbing to the pressure from counties that have had low breakout levels and opening the state up. On the coast, Tabitha Miller, the city manager there, Dan's well aware of this. The influx of visitors has started already. And so to me, it's still a cautious time. And I am not an alarmist. I participated in a lot of quote unquote dangerous activities in my life. And I consider this one that's a crapshoot. And machismo does not beat COVID. And freedom does not beat COVID. And I'm not saying we all got to be locked up, but this board and its members should be super, super careful as we go through this. So anyway, there's my 2 cents.
Quincy, you have something to say?
It just as a follow-up, I for full disclosure, I completely agree with Mr. Shoemaker's concerns, and I mirror and share those. And my purpose for bringing this topic up isn't because I want to have an in-person meeting. It's purely personal, because I won't be able to attend the meeting if we don't do it in this format next month. So I was hopeful that this is the mentality of the board and everybody shares the same concerns, so we can continue doing meetings in this manner. Otherwise, I would unfortunately be absent next month if we weren't allowed to continue doing the video conferences.
Sherry, I have a couple things, but on that note, I think that as far as for the board, I think that we shouldn't get together unless we can absolutely socially distance somewhere in some kind of a setting, which we couldn't do in our conference room. So I think like for June, it probably would be better to continue to do this, and then we'll have Quincy there as well. And then as far as the staff, our staff, we're down in the administration building until at least June 1st. And I hope we're going to open back up June 1st, but that's a question mark at this point. So that's kind of day by day as far as what happens with our retirement staff. But as far as our board, I think it probably would be better to at least have one more month. You learn a lot in a week, in a month, with as fast as things are rolling out here. So, and then I have one other thing when everybody's done with this topic.
Can I just add, if people look at the health officer's guidance and what came from the state, we are in stage 2. The county by the end of the week should have contracts in place to ensure the 135 people tested per day capacity. But then the county still has to submit a safety plan basically to the state, which will probably be 2 weeks from now. The state could take a day or a week or 2 weeks to approve that. And so I think that kind of goes to what Sherry's talking about in terms of like June being the time frame that people are kind of looking at for the second half of stage 2, which includes all offices. But even under the schedule that all offices could be open at that point, it still says telework is strongly encouraged. So I'm hoping that offices will be open at that point, but with very limited staffing, because there's not a reason to be in an office if you can do the work from home.
Okay.
All right.
Okay. And then,
is there any more discussion?
I had one other thing. I just wanted to on the in retirement website, if you look under the Board of Retirement calendar, and it has the 2020 Board of Retirement calendar. I know we adopted that, and I know anytime we change that, it comes back to the board and that. But when you look at it for 2020, it looks like we never really updated at one point we were going to have the May meeting on the 27th, so Jeff could be there, and then it looks like now we've replaced that with this meeting. Correct? That meeting's gone.
Mm-hmm.
Okay.
Yes.
Okay, but then now, like if you look on our website, it shows the meeting is next week, next Wednesday. So I'm just thinking maybe we need to beans too, that just so we make sure that we're accessible for anybody that wants to watch us. Maybe we need to put notes on this until we can get it in front of the board, maybe to make sure. And like this May 20th we're not going to have a meeting, but that's what's on our website. So we may want to just kind of put some notes on there, just a suggestion.
We can post an updated calendar. And Judy,
So that should have been corrected when you changed the meeting to the 27th. So So that's just our fault for not getting the updated calendar on the site. But the 13th meeting is a special board meeting in addition to, so we really do need to officially cancel that 27th meeting.
Okay, so that'll be done. Thanks for bringing that to our attention. Is there any more discussion about COVID-19, or then is there any general board member discussion? Also, I just wanted to add that I don't know if any of you have registered, but you can attend the SACR's Spring Conference online, and they usually have some interesting presentations. So we're going to save a lot of money not going there physically. But it should be interesting. I want to see a few of the presentations. So it's available through Friday. So if there's no other discussion, we will go into closed session.
I believe Richard had his hand up, Madam Chair.
Oh, hi, Richard. Sorry about that. I didn't know if you were
pushing the button this time. In regard to the conference, I don't know if I was just being clumsy. I went online to register for some of those, and it wanted me to join and pay a membership fee. So, Judy, if I contact you with what I see, could I gain help with that, or did I just go in the wrong place on that site?
Yeah, you can ask me for help, and you can actually contact SACR's directly. There shouldn't, because we're system members, I don't think there's any fee to attend the presentation. No. There is
there's
a login access. Some of you may have already have that login access, which I think, Richard, you may have had from a long time ago, or maybe it was something that I set up for you. So you had a duplicate. Yeah, I can help you with that if you still
All
need.
right, thank you very much.
Okay. Any other discussion? Okay, we'll go into closed session, and I'll hand the meeting over to Jeff.
Okay, we need to
Yeah, let me confirm he's ready. Okay, we're ready.
The board voted unanimously to grant Connie Schluter a service-connected disability retirement.
Okay. Thank you, everyone. And is there a motion to adjourn the meeting?
So moved.
Second.
Any discussion on the motion? Unanimous. We don't need to roll call, right?
No.
We're in
Good.
agreement.
We're ready.
Okay,
Yeah.
so we're adjourned at 10:58.
Bye,
Yeah.
Jane. Thank you.
Thanks,
Thanks
everybody.
for everything, James.
Bye, everyone.
Thank
you all.
you.
James, there's
Bye.